And the beautiful thing about Bitcoin is you don't need to be 100% in to participate in the upside that I believe is coming. So if you have 20% of your portfolio, which is a lot, in Bitcoin, and it goes to the price target I think it goes to, 20%, you'll do just fine. I was lucky enough to enter into the bond market when, in the late 1980s, the USA had decided they were going to fight inflation by raising rates on overnight lending, which is set by the Federal Reserve, to double digits. In the case of the United States, 16%, 16% was the value, the interest coupon you could get by lending to the US Treasury. Isn't that remarkable? But it's because a number of factors contributed to that. The biggest factor was in the early 1980s, the USA went through a bout of inflation, which mimics what we are going through right now. Okay. And Fed Chairman Paul Volcker, famous guy, he turned the dial and he said, I'm going to kill inflation. But inflation went to a level that required bond yields to go to 16%. Now, over the next 40 years, from 1982 to 2022, so that period of 40 years, interest rates went from 16% all the way down to under 1%.
Yeah.
Bonds were a great investment at 16%.
Hell yes.
They are a horrible investment, in my opinion, at the current yields. And just to put the context, the last time inflation was 8.5%, which is the current consumer price index in the United States, recorded as the inflation rate. The last time CPI was at 8.5% in the United States, the 10-year US Treasury yield was over 12%. Right now, the US 10-year Treasury yield is under 3%.
Yeah. So
now, when interest rates go up, or the coupon or the required yield on your bond needs to increase, the price of your bond goes down. And by the way, I would not recommend anyone of any age, whether you're 100 or 10 years old, I don't recommend you own bonds. They are the worst return for the risk that I have ever seen in my life. There's way better places to put your money and way safer places to put your money. Okay, let's talk Bitcoin. Bitcoin is, in my opinion, the best of the hard asset group. So I just threw out a bunch of hard assets to you. I own them all. I own a bunch of real estate. I own a bunch of metals. I own a bunch of commodities. Of course, I own Bitcoin. I own 0 bonds. In fact, a portion of my portfolio, I am borrowing. I'm the reverse of a bondholder. I am taking the cheap money that the bank is willing to lend me and investing in things like levered real estate. That's not a crazy thing to do. Okay.
Yeah.
So that's where I come. And so then you were going to get to your Bitcoin question. So yes, Bitcoin is, in my opinion, the best of all those hard assets. But look, I own all those other hard assets too. I'm not 100% in Bitcoin. That's my biggest hard asset exposure is Bitcoin, but it's not 100% of it. Coming back to it, it's all about confidence. In any market, it's about the confidence that you are holding something that you will be able to sell. If you need to, you will be able to liquidate at a price that will be beneficial compared to the price that you paid for it when you entered into either the contract, which is a bond, or when you entered into the speculative asset, which is non-contractual. It doesn't mean it's more risky. It just means there's no contract to it. An equity share. An equity share of Apple doesn't have a contractual return. You could say, well, they pay a dividend. People, the dividend is non-contractual. They can cancel that dividend at any time, and there's no default repercussions. You try and not pay a coupon on a bond, that's not an option. You are in default of your obligation if you don't pay that thing. Okay, so confidence is the big game. Right now, the confidence of the world is getting a little shattered, not surprisingly, because the people running the global economy are a bunch of drunk drivers, okay? Like, I have never seen less competence in my entire life. Bitcoin is a journey, and I like to say Bitcoin is an IQ test in risk management. And if you just read the first chapter and listen to people like Peter Schiff and all these conflicted commentators, you'll believe that Bitcoin is a Ponzi. I've researched Bitcoin for over 6 years, hundreds of hours of research. It is very simply the most brilliant technological and financial opportunity I have ever seen. I'm not certain, but I am highly confident that this will solve the fiat Ponzi. What I am certain of is that fiat is a Ponzi. And I am also certain that Warren Buffett and Charlie Munger have a vested interest in that Ponzi continuing, because that's what's made them rich up until this point. Fiat money, which is essentially paper money, where you can print more of it without repercussion, meaning it feels great when you're an ordinary citizen and the government prints money and deposits in your bank account, you feel more rich. It really penalizes you in the long run that they're doing that. And take it to an extreme. If the government can print money, why do people work? Why doesn't the government just print money? And why do people work and pay taxes? So you know that there's intrinsically a problem there. But the biggest fiat Ponzi for me is from the credit side, okay? And it's as simple as this. We have reached a credit level as a percentage of our tax base or gross domestic product that it is impossible for the economy, which is your tax base, to ever grow at a pace that'll even be able to pay the interest on the debt, let alone the principal on the debt. That's what's called the debt spiral. And therefore, the fiat Ponzi can only exist by printing more money. And by printing more money, the value of the money that you hold right now gets debased, like it has over the last 100 years. What happens, though, is it accelerates. And in some cases, because you guys are privileged in the USA, but in some cases, countries print so much money that the money becomes worthless.